Energy has always been power. For a century, oil defined the rise and fall of nations. Wars were fought, alliances forged, and economies built, all on black gold. But in 2025, something new is happening. A shift, subtle, strategic, and global. As the world races toward clean energy, a new energy cartel might be forming. Not just about oil, but control. This is Geopolitics and Oil, the new energy cartel, the old guard. To understand what's next, we need to understand the old order. OPEC. Born in 1960, OPEC, led by Saudi Arabia, was designed to give oil-producing nations power against Western corporations. Through the 1970s and 80s, OPEC's decisions shaped global inflation, interest rates, even recessions. When OPEC sneezed, the world caught a cold. But fast forward to today, oil isn't the only game in town. New players, Russia, China, India, the U.S. shale giants, have rewritten the rules. And behind the scenes, global alliances are shifting. The new power players. Enter the BRICS alliance: Brazil, Russia, India, China, and South Africa, now expanding to include Saudi Arabia, the UAE, Iran, and Egypt. Together, they control over 40% of global oil production, one-third of global GDP, and growing influence in energy pricing. For decades, oil was priced in U.S. dollars, the petrodollar system. But now, BRICS nations are exploring energy trading in local currencies, even experimenting with a digital settlement system. If successful, this could challenge not just OPEC, but the dollar's dominance itself. The petrodollar versus petroyuan. China is now the world's largest oil importer, and it's been quietly signing long-term deals, not in dollars, but in yuan. Beijing's vision? A petroyuan ecosystem, backed by its Belt and Road investments and digital payment networks. Meanwhile, Russia, isolated by Western sanctions, is redirecting its oil exports eastward, cementing energy ties with China and India. The result? A parallel system is emerging, a network of countries trading energy outside Western financial systems. Call it energy de-dollarization, or the birth of a new energy cartel, the U.S. countermove. The United States isn't standing still. Shale oil made America the world's top producer, and now liquefied natural gas, LNG, has become its new export weapon. From Europe to Asia, the U.S. is building energy dependency, one terminal at a time. Washington's message is clear. Energy security means allies buying American. But this comes with its own geopolitics, subsidies, sanctions, and strategic alignments that echo the Cold War, only this time powered by pipelines instead of missiles. Middle East, the pivot zone. And in the middle, quite literally, lies the Middle East. Saudi Arabia's joining BRICS. Iran's back in global energy markets. The UAE is investing in both oil and renewables. These nations aren't just suppliers anymore, they're investors, tech players, and power brokers. Their strategy? Hedge both sides. Partner with China on infrastructure. Sell oil to India. Invest in U.S. tech funds. They've learned from decades of volatility. When the world argues over energy, the Middle East profits from both sides. Beyond oil, the new energy cartel. Here's the twist. The new cartel may not be about oil at all. As the world transitions to renewables, control over critical minerals, lithium, cobalt, nickel, and rare earths, becomes the new form of energy leverage. And who dominates that supply chain? China, by far. Add in Russia's uranium, Saudi investment in hydrogen, and India's battery ambitions, and you start to see it. A multi-energy cartel forming quietly behind the headlines. A network that could one day decide not just oil prices, but the cost of EVs, solar panels, and green tech. What this means for investors. For investors, this reshaping of global energy means one thing. Volatility is back. Short-term, oil prices could swing sharply with every geopolitical headline. Long-term, energy markets may split, one dominated by Western renewables, the other by Eastern hydrocarbons and minerals. Diversification isn't just a portfolio principle anymore, it's a geopolitical necessity. Energy ETFs, rare earth producers, LNG exporters, all could play a role in this new energy order. The age of a single energy empire is over, but a world of many competing cartels, that's just beginning. And in geopolitics, power never disappears. It simply changes form. Geopolitics and oil, the new energy cartel. If you found this breakdown insightful, hit that like button, share it with a fellow investor, and subscribe for more deep dives into the forces shaping our financial future.